Hey everyone, welcome back for another deep dive. Today we're diving headfirst into the world of crypto earnings. And with me, as always, is our resident crypto guru.
Hey, everyone.
So we're breaking down a really interesting concept today, something that's got everyone talking APY, annual percentage yield.
Definitely a hot topic.
All right, for those of us who maybe just dipped our toes into crypto, what exactly is APY? Like, how is it different from, let's say, just regular old interest?
Right. So APY, when you hear people talking about those crazy returns in crypto, well, APY, that's what they're talking about.
Okay, so it's more than just your average interest rate then.
Way more. It all comes down to this thing called compounding.
Compounding, okay. I think I remember that term from like my econ class back in the day. But remind me how it works in the crypto world.
Okay, so, with a regular savings account, you might get, I don't know, like a tiny percentage of interest once a year.
Yeah, like pennies on the dollar.
Exactly. But with APY, that interest compounds. Like imagine this snowball, right? It's rolling down a hill, getting bigger and bigger as it picks up more snow.
Okay, that's a pretty vivid image.
That's compounding in action. It's earning interest on your initial investment plus all the interest that's already been added on. And in the crypto space, this can happen daily, weekly, even monthly.
Wow, so it's like that snowball just keeps picking up speed and size as it goes.
Exactly. So instead of waiting a whole year to earn a tiny bit, your money's growing exponentially faster.
This is why people are so excited about crypto earnings then.
Mhm.
I get it. So
Yeah.
where does staking fit into all of this? Because I feel like I always hear APY and staking mentioned together.
Yeah, good point. They kind of go hand in hand. So staking is like, imagine you're a VIP at the crypto club, right? You get special access, perks, all that good stuff.
I like where this is going.
And staking's like your VIP pass. You're basically locking up your crypto for a certain period of time, which helps secure the network, validate transactions. It's kind of like being a digital bouncer.
Protecting the club, I like it.
Right. And in return for your service, you get rewarded. And you guessed it, those rewards are often paid out in APY.
So it's like getting paid to be a responsible crypto citizen.
Exactly. You're supporting the network's growth and earning rewards while you do it.
Pretty sweet deal. Okay, so we're talking about centralized exchanges today. These are the platforms where you can actually buy, sell, trade your crypto.
Exactly. The big names. You know them.
And they seem to love, like really love, promoting their APY offerings. So what's the deal with that? Like, what's the motivation for them to offer these really attractive APY rates?
Good question. I mean, it's not like they're just feeling super generous, right?
Yeah, I kind of doubt that.
They're businesses, right?
Yeah.
And high APY, it's like a giant neon sign to attract users, especially new ones getting into crypto for the first time.
Makes sense. Got to reel in those new customers.
Right, because who wouldn't want to see their crypto growing faster than it would just sitting in their digital wallet, right?
Absolutely, especially with those potential returns we're talking about. So there's got to be something in it for them too, right? Besides just getting more people on the platform, like what's the other side of the APY coin for these exchanges?
Oh, there's definitely another side. It all goes back to staking. Remember how we were saying you lock your crypto up for a while?
Yeah, the VIP pass thing.
Right, exactly. So that lockup period, that's key for exchanges. It gives them this kind of like stability, a more predictable pool of funds that they can work with.
Ah, I see. So it's like a win-win. Users like us, we get the potential for these higher returns, and exchanges, they get this more stable base to operate from.
You got it. Symbiotic relationship. But, and this is a big but, this is where it gets a little tricky.
Okay, I'm sensing a however coming on.
Uh-huh. Yeah, kind of. It's easy to get caught up in that AQY hype, right? But higher doesn't always equal better. Like sometimes those crazy high APY rates, those can actually be a red flag.
Really? Like how high are we talking? When should my alarm bells start going off?
Good question. Let's say you see anything above 30%, maybe even pushing 25%. That's when you really want to take a step back and do your due diligence.
Due diligence, always important.
It could mean that the project is way riskier than it seems on the surface, or that the underlying, what do they call it, the tokenomics? Yeah, the tokenomics might not be sustainable in the long run.
Tokenomics, right? So basically, if something sounds too good to be true.
It probably is.
Yeah.
Exactly. So how do you find that sweet spot? Right. A decent return, but without, risking it all on some shaky project.
Yeah, because no one wants to get burned chasing those crazy high returns.
Right. Well, first off, look at the platform's reputation, Have they been around the block? Do they have a good track record?
Makes sense. Stick with the names you know and trust.
Exactly. Like for those big established cryptocurrencies like Bitcoin or Ethereum, you'll see APYs on those reputable platforms ranging from maybe 5 to 15%. That's a pretty solid, benchmark.
That makes sense. Those are more established currencies. So it's like investing in, I don't know, like a well-known blue chip stock versus some risky penny stock.
Exactly. You got it.
But what about newer tokens? I imagine those might have different APY ranges since they're, well, newer.
You're absolutely right. You'll often see higher APY offerings with those newer, smaller tokens. Think like 15 to 30%, sometimes even higher.
Okay, so higher potential rewards, but obviously.
Higher risk, exactly. It's a trade-off. And, this goes without saying, but always do your research, understand the project, the team behind it, their long-term vision.
So it always comes back to due diligence. Do your homework, folks. Now, let's get into some real-world examples here. When we talk about major platforms, we're talking about the likes of Binance, Coinbase, Kraken, right?
Yep, all the big names, household names at this point.
What kind of APY offerings would someone typically find on those platforms?
Those are all excellent examples of well-established centralized exchanges, and they're going to offer you a whole smorgasbord of options, a buffet of APY, you name it. It really depends on, which cryptocurrency you're looking at. Like with stablecoins, for example, those tend to have lower APYs because they're designed to be more, well, stable.
Right, so those are like the, what would you call it, like the crypto equivalent of a high-yield savings account.
You got it. Not a bad way to look at it.
So if someone's looking for a little more, let's say, adventure, a little more risk and reward, where might they go?
Well, then you might want to check out platforms like Nexo or Crypto.com.
Okay, and what makes those platforms different?
They tend to have more diverse offerings. You might find some really interesting APY rates there. And they often have different tiers of rewards based on how much crypto you stake, how long you lock it up, that kind of thing.
So many options.
Yeah.
It's like, how do you even choose?
Right. It can feel overwhelming.
It's like trying to pick a savings account, but in the crypto world where the interest rates are like on steroids.
Haha, that's a good way to put it. And just like with a savings account, you wouldn't just blindly pick one without doing your research, right? You got to compare the rates, the terms, the fees, all that stuff. Same goes for APY in the crypto world.
Right, so do your homework, understand the platform, and probably most importantly, know your own risk tolerance.
Exactly. Don't get caught up in chasing the highest APY if you can't stomach the risk.
Solid advice. All right, so as we wrap things up here, what's the key takeaway our listeners should walk away with today?
I think the biggest thing is when it comes to APY, knowledge is power. Really understand how it works, the different platforms out there, the potential risks. The more you know, the better decisions you're going to make.
Absolutely. Knowledge is key, always. Well, folks, there you have it. Another deep dive in the books. We explored the exciting and sometimes wild world of APY. Hopefully you're feeling a little more informed, a little more empowered to make smart decisions with your crypto.
And remember, this is just the beginning. This whole space is constantly evolving, so stay curious, keep learning, and happy investing.
Couldn't have said it better myself. Until next time, everyone.